All right, guys, welcome back. Welcome back. Hope you guys had a fantastic day. We got one more day left this week. Let's finish off with a bang. Here's the good news. We have one of my favorite, one of the easiest chart patterns setting up right in front of us tonight. Tomorrow should be a pretty easy trading day. I have 3 easy, simple ways to make money on Friday. By the time we're done tonight, you'll know where the winners will be, how to avoid the losses, and make some more money on Friday. Now, before we jump in and talk my favorite trades for tomorrow, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, do me a favor here tonight. Hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for sticking around tonight, tuning in, supporting the channel. But enough of the intro. Let's make some more money on Friday. Starting off tonight here, of course, as always, the Nasdaq triple Qs are all ready. The S&P and the SPY are all ready. The 60-minute time frames are giving us some really nice clues right now. Everything's bullish, you'll notice. S&P's bullish, Nasdaq is bullish, but the real big clues right now are these little tiny trading ranges. Don't let those little ranges fool you. That range right there, that pop up into that trading range, in my eyes, it tells you pretty much everything you need to make money tomorrow. There are 3 easy strategies, easy game plans. We'll talk about that tonight here in a moment. But before we do that, though, and talk entry tactics and strategies for tomorrow, let's double check our schedule for tomorrow, because tomorrow is a Friday. There's no major news on the schedule for tomorrow, but Fridays are not like every other day. 2 things happen on Fridays. First of all, as the day gets later, on Friday afternoons, the markets get low volume, they get illiquid, right? That's the first thing. The second thing is, on Friday afternoons, we're tired, we're not at our best, and we tend to make poor decisions on Friday afternoons. Knowing that, I have what I call my Friday mindset. The Friday mindset says, I'm going to get in early when the markets are at their best, and I'm at my best, remove risk, take some profit, and let it run. Get in early, find trades early, remove risk early, take some profit, but leave a little piece of that position open, because if you know anything about Fridays, they love to go and go and go and go. And oftentimes, you catch those moves on Friday, you can make your entire week. So Friday mindset, no major news to worry about. But again, get in early, remove risk, take some profit, and let that sucker run. Fridays love to run. Now back to our charts, because of course, we know the money is made on the charts. Let's now look at my favorite trades here for tomorrow. I got the S&P ready, Nasdaq's ready. Got to see you are ready here as well. As I mentioned earlier, we know we're bullish right now. There's no doubt about that. But the big clues are in these little tiny trading ranges. Whenever I see ranges, I always get excited, because they make our job really easy. Now, we don't trade a 60-minute chart in our trade room. We trade tick charts in our trade room each morning. This is a 7,000 tick. You'll see there linked up in the upper left-hand corner. And if you're watching for the first time right now, that yellow line right there, that is the 21 EMA, the most important tool and pretty much the only indicator you need to find lots of winning trades. The most important clue, right, this one really big clue on this chart right now, and that is what we call a directional range. It's a strong run up, a big move up into a trading range. Now, ranges, we talk about this a lot in our free video classes. Ranges are magnets, and they love to rotate back and forth. So what we do is we buy low, we sell high, buy low, sell high, buy low, sell high, and we look for breakouts. Now, knowing that's how ranges work, there are 3 easy strategies to make money on Friday, knowing that we have a directional range. My favorite out of all of them is always going to be a bear trap or a fake out breakout off support levels underneath that trading range. Now, pay attention. There are 4 different variations of that fake out breakout or that bear trap. I want to talk about those 4 different pattern variations tonight. I want to make sure you guys are ready for that tomorrow. The second way to make money with a directional range is another easy one. It's a breakout pullback. Breakout pullbacks can be very lucrative, make money on the way up, on the way down, and the way going higher here. We'll talk about that as we go deeper into the video. And then I've got one more strategy. I'm going to make you wait for that one. One of my favorite strategies on a directional range. We'll talk about that third and one of my favorites a bit later on in the video. So if you like making money, I will give you a reason to stick around all the way to the end. We'll cover that final third strategy towards the end of this video. Now, let's talk about entry tactics. My favorite entry for tomorrow is always going to be in a bullish directional range, is a bear trap underneath that low. Now, here's the problem though. We never quite know how far that pullback will go. So here are a couple setups I'm watching for tomorrow. But let's talk first of all is the two-legged pullback. Whenever I have a big move up like this into a trading range, a two-legged pullback is always my favorite way to buy that dip or buy that bear trap. Now, when I say two-legged pullbacks, I want to get underneath the 21 moving average. In my free video classes, we talk about measured moves. So one leg, two leg, it'll be a little bit more than a measured move, right? A measured move is a 100% extension. So imagine a measured move a little bit more than that measured move, all right? So looking for is a two-legged pullback, and that will get us down into an area of resistance. Now, again, I don't know how far this market will keep going, right? Sometimes it really drops really fast. So I'm not going to try to pick the bottom. I'm not going to blindly buy that low. What I will do, though, is once we start to pull back to that moving average, let's see if we can get some rookies trapped in, right? This is not a bear market. If I pull back now and I start seeing bears try once and bears try twice, right? Once those bears commit, now I know where their stops are, right? And I can use those stops to fuel that move going higher. One of my favorite trades is a failure pattern. This would be a two-try failure pattern. We teach this, of course, in our free video classes. A two-try failure to trap those bears in. And then where does the market want to go? Remember, ranges want to rotate back and forth. We'll take out those highs, right? On the way back up to that high, there's one specific type of entry pattern I look for. It's called a bear trap. Now watch closely on this one. It's a higher high in price and a move right below that prior low. This is the sequence I always look for in a bullish directional range. Find support levels below, wait for that two-legged pullback. Again, don't pick that bottom, but trap the bears in, getting short below moving average, use those stops to fuel the move going higher, and then as we try to take out those highs, and as we try to take out that pendulum swing up around that high, I look for that bear trap entry to finish the job, add to the position, or jump in if you missed the failure off of that low. That sequence is what you want to look for. Now, sometimes we get lucky. Sometimes we get two bites at that apple. For example, sometimes that two-legged pullback is really large. Okay, these are one of my favorites we see in our trade room. We'll get the same thing, right? We'll get that two-legged pullback. We'll trap the bears in. We'll get those stops to get squeezed. We'll run higher. We'll take our one-to-one target, right? Stop to target, one-to-one. Move that stop up to entry. Lock out the risk. Guarantee the reward. We talk about this stuff, by the way, in our free video classes. But now sometimes what happens is sometimes the underbelly of that range will hold and the bears will come in and whack that thing right back down again. And it'll go back all the way and retest that low. Now think about what happens in this scenario. The sellers who sold short on that pullback, where do they take their profit? They take their profit back at that low. So the way I see it is sellers become buyers when they retest that low. Now, once they retest that low now, do it again. Do it again. Trap those bears in. Again, I have no idea. It may keep going lower. I don't have a crystal ball. What I do know, though, is once they retest that low, if I start seeing bears come in once, bears come in twice, I'm going to use that same two-try failure pattern to run the stops, buy into stops, and again, as we go higher, where's the market want to go? Back up into that range overhead. It's a magnet, so I'm going to go in and buy as low as I can, and we do that with what? With a bear trap. A higher high in price, move right below that low right there, right? Again, a 2-try failure into a bear trap entry. Leave those runners, because as always, right, Fridays love to run. So again, think about that sequence, right? That 2-legged pullback, get that 2 tries and back up again. And hopefully it does, right? Hopefully it does rip all the way back up. We all make a bunch of easy money tomorrow morning. But if it does double bottom, right? Don't mistake that for being a reversal. It's almost never a reversal. The key is once it retests, trap those bears in, trap them in again, right? Keep on buying as low as you possibly can. I love that double bottom retest. Okay, so let's slow down, because if you're here for the first time right now, this might be a brand new language for you. Bear traps, failures, double bottom reversals, range rotation. Don't you worry. I teach all of these patterns. I have hundreds of examples of all these pattern setups, all included, all taught in a lot more detail in our free video classes. I'll put a link up here for you. Don't you worry. I'll hook you up. I'll put a link up here for you, upper right-hand corner. Grab that link. Hit that link and take that free trading course, because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room to know exactly where the best winning trades are going to be that day. Then once you know where to look for the winners, then I'll teach you 4 of my favorite entry patterns, help you time better entries and start making money on your own. The bottom line is the markets are way too good right now not to be making consistent money. If you're still missing the best trades each day, if you're tired of taking losses, if you're struggling to qualify for a funded account at Apex or Top Step, take that free course. It's perfect for someone trying to make the jump into full-time trading. And also be aware too, if you can't grab the link up top there, I'll put all the important links we talk about tonight down in the description of the YouTube video. I'll put the free class links down there. We get together every day and trade together at 8 o'clock in the morning in our trade room. I'll put our trade room membership links down there. And also, too, I'm on Twitter during the day. If you're on Twitter, I'll put my handle down there. Give me a follow. We'll give you guys some updates throughout the day in between these YouTube videos. Right, guys? So now you know where to learn more about the traps, the failures, the double bottoms, and the range rotations. And I'll get a lot of examples linked up in that free video class. Now let's talk about some variations of this. And again, don't forget, later on in the video tonight, I'll talk about the breakout pullback, right? Second strategy. And again, I got one more special strategy I'm going to save all the way to the end. So don't go anywhere. We got a lot more to cover on this YouTube video. Now, I want to get that 2-legged pullback, trap those bears in, and back up again. But sometimes we simply don't get it, right? Sometimes there are so many buyers down here, we get that deep pullback and just boing right back up into that trading range. These can be frustrating, and they can also be very expensive if you don't know how to trade them properly. For example, when we see a really big move down and it kind of V bottoms off of that low, what will usually happen is it begins to grind and grind going higher, all right? What happens to me is, and I'm sure I'm not the only person is once it starts grinding higher, that little voice in my head says, come on, dummy, get in, you're going to miss it. Whatever you do, do not chase this. It's very easy to lose money by chasing after it because of FOMO. What I've learned to do over the years is stay patient, draw a trend line off the high, bring it down off that low, and then what do I always say in these videos? Look left, find some prior swings, and I'll tell you, you want that first test. I always say first test is the best test. You want that first test off that new channel, right? Get that channel off the highs, bring it down off that low. You want that first test. This could be a bear trap, like I'm showing you right here. It could be a failure pattern. We oftentimes will get just a little bit below the moving average. A failure pattern was bears come in, get short off the 21 EMA. A failure pattern into pullback combination. Any of the entry patterns you guys are learning in the free video course. The most important thing, though, is if it V bottoms off that low, promise me you're not going to chase this thing. Because when you jump in long, right, that's the minute this market says, okay, now we pull back, they stop you out, right? That nice tight stop, they stop you out right in time for pros, grab bear traps, failures, and pullback combos and run right back up to retest the high. Those V bottom reversals, they're not easy at first, but now you get a good strategy, you know, to manage those emotions and get in on the winners. Last but not least, we all want that deep pullback right now, but we know right now the markets appear to be grinding up into the all-time high. We mentioned this last night. Again, we all want the deep pullback right now. I want that deep pullback, but if all I get is a shallow pullback, for example, this pendulum swing right here, right? This area right here, if all we get is a shallow pullback, what's the problem? If we get a shallow pullback, I don't want to buy too high. So because of that, I need to get a bear trap entry. I get a bunch of emails today, people making money on these today, especially the Nasdaq, that bear trap. All right. So if all we get is that move down to that pendulum swing or somewhere in this area, again, I want that deep two-legged pullback. That's what I want, right? But again, I don't know how the market will react tomorrow. If I start seeing this thing struggle to go lower, and then all of a sudden, right, those bears keep trying to short, I want to buy as low as I can. Remember, higher high in price. And that's called buying a shallow pullback trap, right? A shallow pullback trap. We need to get in as low as we can because, again, the big money is waiting all down here. So shallow pullback traps are kind of the final variation of buying that bear trap underneath that trading range. All right. I think I've covered all the bases now on that pullback, right? Deep pullbacks, double bottom pullbacks, right? And of course, shallow pullback traps. Now let's get some good stuff going here. Let's talk about now on a breakout pullback because breakout pullbacks can be very, very lucrative. And again, I got one more game plan we'll save towards the end. Let's grab the Nasdaq now. The Nasdaq, of course, feeling a bit lonely over here. Let's hit up the NQ and the triple Qs. On the 60-minute time frame right now, the Nasdaq, very, very similar as the S&P. We're very bullish overall. There's a strong pop-up in this very tight, nice, tiny trading range as we finish off that pendulum swing target. A great example, by the way, of how ranges like to rotate back and forth. No surprise, the market having trouble breaking through this area right now. Let's drill down, though, because, again, I think that range right there, I think that is the big clue here for tomorrow. This, of course, is a 4,000 tick chart. You'll notice Nasdaq has a lot less volume, by the way, than the E-mini S&P. And what do we see right now? We see two ranges here on the Nasdaq. Pop up into one range, pop up into a second range. Okay. Now, in the previous chart, we talked about that bear trap. Same basic idea, right? Get that move down and buy it back up again. Again, I want that two-legged pullback, trap those bears in, back up, right? If it double bottoms, holds off the underbelly, we do what? We do it again, right? So same exact game plan we talked about on the S&P 8 moments ago. V bottom, don't chase it, find that channel, buy that bear trap. Same exact stuff we talked about on the S&P 500. Let's talk now about going higher. Right, going higher here first, a breakout pullback. And with breakout pullbacks are really quite simple. The key is if we begin to rip and run higher, I want to buy as low as I can. I'm going to buy what we call bear traps. Bear traps are the best way to buy as low as possible. So remember, when we look for that breakout pullback going higher here, the way you make money going higher with it is not to chase it and buy high. You wait for one of these patterns right here. We get that higher high in price, that trap below that low. You want that pattern as we start to break out going higher. If we begin to rip and run higher here, you want to focus on those bear trap entries on the way higher. Now, usually what happens on these is these will make a measured move. Okay, measured moves are very common after a range breakout. Write that down. Measured moves are very common after a range breakout. So as we break out higher, I want that higher high in price and that bear trap entry on the way up. Think about that breakout leg being a measured leg, and that will give you an idea of where to take profit and where to stop buying. We don't want to buy high. Now what we do is pay attention now. Very, very important. What was resistance now becomes support. Okay, so we look back, we look left. What was resistance now becomes support. Okay, so once we take out that measured move now, we take our profit and we don't buy up here now. Now we wait for that pullback. Okay, now a lot of times that pullback is one of those two-legged pullbacks. The key though is I want to get back around the prior highs of that trading range. And just as we mentioned before, right, I don't know how far that thing will go, right? It may collapse all the way back down into that range. I don't have a crystal ball. What I do know, though, is once we pull back to that moving average now, I can use that same game plan, that one try, two try. Again, I'm going to rope in those bears here, trap the bears in, use their stops, right, to fuel that run back up. And what's the entry pattern on the way back higher? It will always be, you guessed it, a higher high in price and a bear trap right below that low. So think about this now on a breakout pullback, right? Again, if it begins to punch and run higher, I look for that bear trap entry, higher high in price, buy as low as you can. Buy as low as we possibly can because we're way, way high up on the chart. Remember, think about that measured move as where your final target goes. Now, don't chase it up there, right? Don't buy it up there. Wait now for that two-legged pullback. Again, a little more than a measured move. Get somewhere right around the top of that range now. Trap those bears in. One try, two try. Use those stops to fuel that move going higher and then add to your position or jump it again, higher high in price and that bear trap going higher. One more thing you want to think about is oftentimes this move right here is symmetrical to this move right there. Again, ranges love to break out and make measured moves. Markets are fractal, right? So small measured moves can be built into larger measured moves, right? Keep it in mind on that breakout pullback. Remember, tomorrow's a Friday. Fridays love to run. So leave that runner, right? Leave that runner up around that measured move. These are called these are called breakout pullbacks. One of the most consistent, consistent ways to trade a range breakout. Now, I've been talking about all evening here, that third and final game plan. One of my favorite ways to trade a range is a head fake or a fake out breakout. We may see this market go higher and get whacked right back down again. Okay, here's what you want to think about if that happens. First of all, the size of the move above the range is projected down below the range, right? So if we end up, and we'll use this range, of course, as the most recent range, right? There are two ranges in the chart right now. The most recent range is always the one you want to pay attention to the most. So, for example, if we end up running higher here, right? Running higher here, blasting higher, and again, we're way high up right now on the 60-minute. If this thing gets crushed and whacked right back down again, what you do is you measure the amount above, you project that down below, and that will tell you now where your best entry is going to be. Again, we expect that two-legged pullback, run down, think about the amount above, the amount below, and what do we do down here? We don't pick that bottom, do we? No, never, right? Never. We wait for the price to pull back, we get those bears trying a couple times, right? And we squeeze those stops and run back up into that trading range, right? Makes sense? Now, one very common question, of course, is could I sell off of that high? How would I sell off that high? Great question. You need what's called a crown reversal. So again, we punch up, we end up running back down again. Now again, if we start seeing that higher high in price, that will be your right? That's your breakout, right? That's your bear trap, the breakout we talked about a few moments ago. But if this thing starts to pull back to that 21 moving average, and we start seeing these buyers struggle, give them one try, give them two tries. If I see that lower low in price and move just a bit above that high, nice strong red candle closing firmly below the 21 EMA, these are called bull traps. I call these crown reversal patterns in our trade room, and the run back down again. All right, this is the way you short a fake out breakout. And again, this is the third strategy I mentioned earlier, the third and final strategy of a range breakout. Okay, now remember, this is a counter trend trade. So in my eyes, this is a half size position. This is a quarter size position. Right? If you're brand new to this stuff, let's get you making money going with the trend first. This might be a zero size position. Right? Might be better off sitting this one out until you start making money consistently going with that trend. So keep it in mind, right? Be careful. These are counter trend trades. Go smaller. At least that's what I do, right? Go smaller, right, than you normally would. And again, that's a short side trade to it. Mark the amount above, mark the amount below. That will tell you now where to A, take your profit targets on the short, and B, right now, as we begin to roll over here now, think about this, right? As the market rolls lower, it's going to feel very, very bearish in the short term. Is it bearish long term? Hell no, right? This is still very much a bull market. Now, at this point, again, for all I know, they're going to keep on going. I don't know how far those reversals go. These fake out breakouts can oftentimes be very, very aggressive, and they'll keep on going quite a bit. Okay, the bottom line is once the dust settles and they start pulling back to that moving average, let those bears get in. Let them try once, let them try twice, right? Combine support levels, again, pendulum swing, right? The amount above, the amount below. Combine those here. Trap those bears in, let them try a couple times, and squeeze those stops, right? And remember, as it runs back higher, where does it want to go? It wants to go back and take out the other side of that range, because that's what ranges do, right? They want to rotate. So as it rotates higher, what do? You know this, it's going to be a bear trap. It will always, always be a bear trap. One of the nice things about trading is once you learn these sequences, it's just rinse and repeat, right? Just keep milking the cow, keep painting the house every day, whatever metaphor you want to use on that, right? So think about this now as that head fake, right? It pops up, it doesn't keep going for a breakout pullback. The buyers struggle once, twice. I call these crown reversals. These can oftentimes be very aggressive. So again, leave that runner. It's a Friday. Measure the amount above, the amount below. Find levels of support below. Again, don't blindly buy support, right? You're better than that now. We can do much better than that. Wait for those bears to come in, trap them in, and then speaking of traps, a technical trap pattern, right, as we run back up and retest that high. All right, guys, that's the way you trade that fake out breakout with crown reversals and pendulum swings. All right, guys, that's the game plan for tomorrow. Now, tomorrow morning, I can't think of any better way to learn this stuff than to come out and trade it with me, 8 o'clock Eastern time. The good stuff happens in our trade room. I'll put all the important links we mentioned, the description of the YouTube video, the free class links, the trade room membership links, my Twitter feeds, right? All the stuff will be down in the description. Any questions, any challenge getting any error messages on the free video classes, don't be a stranger. Give us a call, send an email, use live chat. We're always here to help out if you need help along the way. All right, guys, it's been a great week here. We got one more day left tomorrow. The game plan is set. Hope you learned a bunch here tonight. Hope you use this knowledge to earn a bunch tomorrow. And hopefully I'll see you sometime trading with me in a morning trade room at 8 o'clock Eastern time. In the meantime, have a great rest of your evening. Thank you so much for tuning in and sticking around all the way to the end. Get out of here. Enjoy your night. I will see you guys tomorrow morning, opening bell in the trade room. If not, same time, same place, back here next week. Be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.